So the format of an income statement, how about we start there? Okay, so an income statement, so financial statements are drawn up at year end to show the profitability, solvency, and liquidity of the business. So these are words you're going to see coming up often lately: profitability, solvency, liquidity, that we're going to need to deal with. Yes, Kumoto?
And what is solvency?
I don't know. I can't explain it to you. Solvency, it's like almost like, you know, how quickly a business can dissolve. So like when we have to sell all our assets, and it's something to do with ratios. Like solvency ratios.
What's the difference between that solvency and liquidity? Yeah, that's what I'm also thinking.
Okay, I'll get there. I'll get to that. So let's quickly go to financial statements. So the financial statements of a sole trader consist of, so we've got an income statement, which is what this lesson is going to consist of. And in our income statement, it shows the same information as in the trading account and profit and loss account. So Mrs. Malberg and I have been talking, and we decided to skip trading and profit and loss and just go straight to income statements, because basically what you do in trading account and profit and loss, we do in the income statement. And anyway, so we're going to kind of teach it all together at the same time. So don't worry that we haven't done trading accounts and profit and loss. It's basically what we're going to do now. Okay, whatever we did there, and closing transfers and reversals, leave that. Okay. Just focus on the income statement for now. Make sure you understand pre-adjusted, post-adjustment, and income statement. Everything else will come together once we build our puzzle. Okay, you know when you build a puzzle, there's lots of little pieces. And then at the end you put it and you've got a big picture. We're still busy building our puzzle, okay? So the income statement will show the same information as the trading accounts and profit and loss. Therefore, all nominal accounts show the net profit. Okay, so nominal accounts, we're going to be dealing with nominal accounts in my income statement. Then we have our balance sheet, or our statement of financial position, shows all the information in the post-closing. Remember, we have trial balance, pre-adjustment, and then post-adjustment. Okay, therefore the assets and liabilities. So a balance sheet will show the financial position of the business at the end of the accounting period. And then our notes to the financial statement, we've kind of introduced those to you: trade and other payables, trade and other receivables, inventories. Slowly in the notes that we've handed out to you, we've just shown you little snippets of what notes look like. So there's about 8 or 9 notes that we're going to be dealing with, and that we're going to be breaking down to you. Okay? Yes? Yes, we can. Open the windows, please. Open the window. Is that what you asked me? Please just push it open there. Okay, so who are the users of financial statements? Guys, you can read through that by yourself. This is basically for theory. The owner, banks, creditors, SARS, potential buyers, maybe investors. They want to know if it is a good investment. So this is for theory purpose. Why would we need to draw up financial statements? And who's going to look at these financial statements? Okay. Next page, the format of an income statement. Yes, Komotso?
I just wanted to say, remember how we were talking about the difference between balance sheet and financial position? I think it's the same thing, because they say the balance sheet shows the financial position of the business.
Shows the financial position of the business. So it's just a change in name. But there must be a reason why it's different. Balance sheet and financial statement of financial position. Okay. Right, so let's go look at this income statement. Guys, you have to learn this format off by heart. You have to know the structure, and you have to know what happens where. But it makes sense, because you have to also know the calculations. And in order to know the calculation, you have to know what goes where. So remember, we are only doing nominal accounts. What appears in a nominal accounts sheet section? All my owner's equity, income, and expenses. The only 2 owner's equity accounts that are not there is capital and drawings, and they are in my balance sheet or my statement of financial position. So if we look at sales there, can you see that there's a little asterisk there with a number 1? That means in order to calculate that amount, we need to refer to note 1 or explanation 1. Okay, that tells us where to go. Right, so if we look at, let's look at these nominal accounts. Sales, cost of sales, gross profit. How do we get, now go over and look at the calculation. Brackets means subtract. So sales minus cost of sales, and can you see there's a thick line there, which means we've ruled off, which is now calculation. So that's my gross profit. And then there's also note number 2 there. Or asterisk number 2, something's happening there. Oh, sorry, here's our notes, guys. Sorry, these are notes. I don't know what these asterisks are. Is the explanation on the back of the explanations on the back of the sheet? So those are notes for you, and the other ones are notes that we're actually going to calculate. Those trade and other payable ones. Okay. So sales, I'll tell you now. Sales minus cost of sales gives me what? Gross profit. If you turn over onto your next page, sorry, I have different notes to you. It explains to you what number 1 is. So it says number 1, the net sales is the sales minus debtors allowances, cash sales and credit sales minus debtors allowances. So this amount, when we are calculating sales and we go and we do our activity, we do a journal, we do our adjustments, XYZ, you're going to in brackets put my cash sales plus my credit sales minus any debtors allowances. Pleasure. Okay, so if you turn over your page, it explains here what's happening. Number 2, my gross profit. That is sales minus cost of sales gives me gross profit. Then we've got other operating income. This other operating income is all of these amounts added together. Do you see there's a block there? So all of these amounts added together will give me this top amount. My other operating income. Are you with me? So now what falls under other operating income? So other operating income is any other type of income that the business is receiving. So things like discount, rent income, bad debts recovered, interest income, donations, anything that could be seen as an other income would then be recorded here. Alright, then we'd add all of them up and put it there. How do you think we're going to get gross operating income? My gross profit plus my operating income is going to give me my gross operating income. So gross operating income is my gross profit plus the other operating income. Are you guys still with me? Okay. Where you lost? Are you stuck at gross operating income? Yes. Okay. So let me start at the top. If you just grab them, sorry, there's 3. Just make sure you're not taking double of double. Make sure it's different pages. Okay, guys. So income statement. We start with sales. How did we calculate sales? We said my cash sales plus my credit sales minus debtors allowance. Okay, that gave me a number. Then we have cost of sales, which we took from my trial balance. Sales minus cost of sales gives me gross profit. So sales, look at the board. Sales minus cost of sales, we rule off, it gives me gross profit. Other operating income is literally commission income, discount received, bad debt recovered, any other type of income, rent income, anything else that can be classified as an income. We will then block out there, draw a block around it, add all of those numbers up, and then put it on top of the block and say, let's say that if we added this up, it was 60,000. So I added discounts, I added rent, I added bad debt recovered, I added commission, anything else that is seen as an income would then be there. Okay, is accrued income going to be here? No, because it forms part of the balance sheet, statement of financial position. Your income statement is only income and expenses. So prepaid expense, accrued expense, those belong in my balance sheet. Okay, financial statement, balance sheet. Don't confuse those. This is just any other type of operating income that the business is going to be receiving. Okay, so are we okay now? Do we understand that one? Yes.
Can I please go sit outside? I can't.
Yes, sure. Please. Right. Then, now how do you think I got my gross operating income? We added gross profit and other operating income, and then it will give me this one. So your income statement works, we will go down the line and then little boxes. Okay, so do we understand now?
Yes.
Okay, so other operating income we got by saying gross profit plus that one gives me that one. My operating expenses, now I will list everything that is an expense. Water and electricity, telephone, except some cost of sales. Remember, cost of sales we've included there. So all other expenses, then we'll draw a block around all my expenses, add them up. Why is it in brackets? Because the bracket means subtract. So we're going to now take gross operating income minus operating expenses is going to give me my operating profit and loss. Are you with me? So you understand how we got gross operating income? So basically we're just going to say income minus expense gives me profit or loss. Income minus expense gives me profit or loss. Okay guys, then we've got interest income here. So interest income is not being included there. Why? Because it has its own little note that we're going to do. Okay, so note number one, when we get there, I'll show you what number one is about. But that's a note where you have to go and do a calculation. And there's lots of things that get added in the note. And we're going to take the total and bring it here. Okay, so then we're going to say my operating profit or loss plus my interest income. Profit before interest expense. So yeah, if you've got any interest expense or finance costs, we'll then subtract that, and then that will give me my net profit or loss for the year, and that is also before tax. I don't think we do tax in grade 10, not yet at least. And then that would be my net profit or loss for the year. Okay, so guys, this is what an income statement looks like. Once you start working through it and you actually do an example, it's quite simple. It works from top to bottom, and it's basically your incomes minus your expenses. Okay, that's what we're working out. Please remember that interest income and interest expense are recorded under separately by themselves at the bottom of the notes.